Welcome to today's webinar on tax education specifically for childcare businesses. This is the third video in a three-part series about tax education for childcare businesses.
The information contained here has been prepared by Civitas Strategies Early Start and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies Early Start team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute an attorney-client or any other advisory relationship. Reproduction of this information is expressly prohibited.
In today's video, we'll be going through some tools that you can use for tax preparation, and we'll also address some frequently asked questions that we often receive from childcare providers. Specifically today, we'll discuss how stimulus funds may impact your taxes, tools for getting ready and through tax season, and frequently asked questions. First, let's talk about how stimulus funding can impact your taxes and the opportunities you have. Now, if you received stimulus funding during the last tax year, the rule of thumb is that you can report the revenue and then you also deduct the expenses. So what does this look like? Let's run through a few scenarios where you receive $10,000 in grant funds during this tax year. In this first scenario, let's say that you get the money and spend the money in the same year. So you claim $10,000 in revenue and you deduct $10,000 in expenses because you spent the grant funds on eligible business deductions. Your revenue increases by $10,000 in the eyes of the federal government, and your expenses decrease by $10,000. So in turn, your taxable income is not affected. The same amount is seen by the federal government as taxable income, as if you hadn't received grant funding. Now let's look at this second scenario, where you received $10,000 in grant funding, but let's say you only spent $5,000 this year. Let's say you were waiting for next year to spend the remaining $5,000. You must claim $10,000 in funding as your revenue, right? That increases your revenue by $10,000. You can deduct the expenses that you paid from your grant funding, right? So if you spent $5,000 of grant funding, then you can claim $5,000 in expenses on your taxes. Ultimately, this means that your taxable income is increased by $5,000. So you will be taxed on that $5,000 this tax year. And in this third scenario, let's say that you received grant funding during this past tax year, but due to the timing of the funding, it was more like a reimbursement because you are getting reimbursed for an expense which you already incurred during a prior year, okay? And so in this scenario, you are getting the $10,000 grant, but you did not spend those grant funds this year. You spent them last year. So you should have deducted eligible business expenses as deductions in the past tax year. If you didn't, you do have a chance to amend your taxes so that you can report those expenses as eligible deductions and perhaps get some money back once your tax return is refiled, right? But if you already reported your eligible business expenses that the grant funds covered as a deduction, then you cannot claim the deduction again, right? You already claimed it for a prior year, or you should have claimed it in a prior year. And so for that reason, in this case, you would be subject to tax on the $10,000 in grant funding. Now let's talk about some tools you can use both before tax season, during tax season, and after tax season. First, before tax season, make sure that you have a system to track all your money that's coming in and all your money that's going out. You could use a ledger, a bookkeeping system, or a child care management system. Make sure that you have some process in place that works for you and that is capturing all of your money going out and all of your money coming in. It's also a good time to put in place an hours and mileage log. You can track the number of hours that you work as far as when your child care program is open, as well as any time you put in to make your program high quality when you're doing some administrative or operational time outside of program hours. And when you log your mileage, you could either use an app or you could use a simple pen and paper log. Make sure you're tracking the number of meals for your children, right? Meals and snacks, because you can report food for your enrolled children who are not your own children as an eligible business deduction. You can also assess your taxes from last year to better prepare for this year's filing. There is a free online tool from WECA that you can use to assess your taxes from last year. The Confidence and Quality Tax Rubric app was developed as a result of that study from a Luminary Evaluation Group that I spoke about in the first video in this series. These questions help you as a child care provider to optimize your deductions so that you make sure you are reporting business expenses where they are deserved, right? So make sure you're counting everything that is due to you. And we also want you to make sure that you're recording those amounts in the right spaces, and we ensure that we understand what should be included in each of these calculations, right? So this online app asks you yes and no questions to determine where your opportunities are for your tax return so that you can update how you file, how you record your expenses and revenue for this year's taxes, because optimizing your deductions means less profit is subject to taxes, right? We learned about that. During tax season, make sure that you are involved in your filing, right? Use a tax workbook such as the Homegrown Tax Workbook or a similar tool to collect all your information. Don't rely on your preparer to capture everything, right? Make sure that you have a hand in ensuring that all of your information is captured so that you are optimizing your tax return opportunity and keeping more hard-earned dollars in your pocket. You can also prepare your own taxes. WECA has easy-to-use guides that take you through all of the steps of filing your taxes using the 3 big tax programs to save you time and money. Check out these guides. After tax season, be sure to keep a copy of your taxes. Keep your tax returns and all supporting documents for at least 7 years. You also want to follow the Taking Care of Business blog for timely updates about each tax season. Civitas Strategies Early Start had the honor of continuing Tom Copeland's Taking Care of Business blog after Tom's retirement. Tom Copeland wrote over 1,000 articles on family child care business management, and Civitas Strategies continues to maintain and add new content to the Taking Care of Business blog. You can access that blog at tomcopelandblog.com. This can be an excellent resource for you throughout the year as you move forward in managing your child care business after tax season. Now, let's move to the frequently asked questions. We're often asked, what expenses are considered business use of home? What's eligible for me to claim, right? How do you pay for your home? Do you pay rent? Do you pay mortgage? That cost can be considered a business use of home, and you can apply time space to that. Alongside, depreciation can be considered as well. What utilities do you pay to keep your household running? This could be electric, oil, gas, water. Do you have to pay for trash and recycling pickup? Did you add solar panels? You can use the time space percentage to deduct the business use of all of these items. Furniture. Now, desks, chairs, tables, if these were purchased for both business and personal use, then you can apply time space. If you are outfitting your child care program in your basement, which is exclusively used with kiddie chairs and other furniture that is clearly meant for your child care program, then that is exclusive use. So that would be a 100% deduction. Furniture is in regard to furniture that is in regularly used spaces falls under time space. Cleaning, extermination, landscaping, anything that you're doing in your home to have that you will need to do to keep your business running, right? Operational and high quality. If you have wasps in your attic, you are not able to run a safe business, right? If those wasps are flying around your backyard where your kiddos are playing, right? So exterminating pests is certainly a service which you can apply time space to in order to have a reduced tax liability. If you improve the kitchen where you're preparing food for children, that is an eligible cost. Any appliances that you use for both personal and business use, that might be your dishwasher, your microwave, your washer dryer. You can apply time space percentage to expenses regarding those appliances. Of course, your home insurance, your property taxes. Be mindful that if you have a mortgage, your property taxes may already be looped into your mortgage payment. Say you have to repair or replace your furnace. Say you have to repair or replace patios or fencing, areas where the kiddos go, and is also used for your personal benefit. Flooring and painting in regularly used spaces, right? Windows and doors. Now, the windows and doors probably are in regularly used spaces, but if you have a situation where a window or door could affect safety, for instance, if glass in a window is broken on an area that you might not claim as regular use, but that the kiddos potentially could come into contact with, there's a case there for business use deduction. And home repairs and upgrades as well. It doesn't have to be in the area where your child care program exclusively operates for it to be considered using the time space deduction. Now, what about stimulus funding? A big takeaway is that the funding is taxable. It's considered additional revenue. However, you also get the deduction for spending the funding on eligible business expenses. Make sure you keep your records clear. They're not only for your taxes, but also for grant monitoring. Back them up. If you only have them in one spot, make sure you save them in another spot. This could mean that you use a cloud drive. You could use an external hard drive. Make sure that you have it in two places. Funds typically, grant funds, typically cannot be used for construction. Grant funds are subject to time, space, and other proration. Now, what about mixed personal use? Going back to time, space, it includes home and land improvement expenses. Your time can include preparation and other time without the children. As we mentioned, it's very important to not only include the number of hours that your program is open, but also any of your hours of labor that you spend taking action to ensure that you are operating a safe, high quality program, right? And educational as well. So make sure you're giving yourself the credit you deserve. Anytime that you spend researching curriculums or researching lesson plans, putting together those lesson plans, preparing food, cleaning the child care space, make sure that you include all that time. Other proration methods should be used for non-home items, such as a cell phone. Most commonly, we're looking at cell phones and cars. So with your cell phone, you would look at your bill, and if you have one phone line for all of your business and personal use, then you would look at your phone bill and itemize which phone calls were for business and which were for personal. You can then determine the percentage of your entire phone bill that was used for business versus personal. And that's how you prorate your phone bill. So say you had a phone bill with 500 minutes of call time from the past month, and say you add up all of your minutes and 300 minutes were spent on the phone with parents and families or for general business purposes, right? Any business purposes. And the remaining 200 were personal use. Well, you would divide 300 by 500, and that comes out to 60%. So in this case, 60% of your cell phone bill for your cell phone would be able to be deducted as a business expense. Be mindful if you're on a family plan that it would not be 60% of the entire bill, just 60% of the cost of your cell phone bill. Also, cars. We talked about how to itemize deductions for transportation, right? You can use standard mileage rates or actual cost. As we discussed, actual cost requires a lot of record keeping, and if you use transportation minimally for your child care business, then it is most likely in your best interest to use standard mileage deduction. Everything that I just talked about as far as proration also applies for stimulus funding. And another question that we're often asked is, how do I find a good tax preparer, right? You're going to want to investigate if a tax preparer has received training and if they're qualified. Many tax preparers have a CPA. If they don't have a CPA, they should note that they are certified by the IRS to prepare taxes. You also want to know if they have worked with child care providers before. Child care, especially family child care, is a very unique subsector of business in tax law. So it's very important that your tax preparer not only knows how to prepare business taxes, but also understands how to prepare child care business taxes. Now, this isn't very easy to come by, right? So we recommend many folks ask around in their networks to see what their neighbor providers, who their neighbor providers are using, and what their experience has been. Has it been a positive experience and would they recommend them? Or is it a lukewarm review that you might not want to use that person, right? So ultimately, your best bet is to look for a child care provider who you feel like you can trust and communicate with well, right? Are they going to be attentive to your needs? If you share the tax prep rubric with them that we talked about, will they take the time to look at it and read it through with you? If you talk about it with them, would they be able to dedicate some time to listening and understanding and applying that knowledge to your tax returns? That ultimately can be more important than whether they have necessarily worked with child care providers before, unless you've spoken with the child care providers who they've worked with and they can recommend their work, right? Are they available after tax season for advice or changes, and will they give you a copy of your return? You're ultimately looking for someone who you can partner with in this process and who you can learn from and who is willing to learn with you about some things that they might not be knowledgeable about.
Additional resources for early care and education can be found at the Wisconsin Early Childhood Association or WECA website. If you are not a member of the Wisconsin Early Education Shared Services Network, You can click here to learn about business training and support it offers. If you are ready to join the Wisconsin Early Education Shared Services Network, you can also click here to join